Hey everybody, welcome to today's session. In today's session, we are going to be backtesting Cadjpy. Cadjpy is one of the pairs that we have on our watch list. So it's one of the JPY driven pairs, which also there is Euro JPY and USD JPY. So that's our watch list. So before we actually start backtesting, as you know, we have to check the stats of the pair Cadjpy for the past 3 months. How did he trade it? So these are the stats. We had we took a total of 5 trades. 3 were losers, 2 were break-even trades, and all of the 3 losing trades we actually got in this month of August. So we are going to be backtesting the losing trades, and then after that we'll be backtesting the pair as a whole. How could we have gotten better trades and ended up being profitable with it? Okay, so we're going to start backtesting the losing trades, which all of them were in August. Man, August has been a month. I'm surprised we even ended up having 1%, bro. Like, it's insane. Okay. So the first losing trade that we took, as I said, it was in August. We took it on the 18th. Where is the 18th? It should be somewhere here. 18th, all right. So we took it on the 18th, right here. It was on the 1 hour, perfect. So we took a short. So let's actually bar replay so that we can actually see where we're trading at. It was somewhere on the 18th. It was in the almost New York Open. So somewhere, let's just put it somewhere there. Right? So this was how the chart was looking on the 18th of April, and we took a short. Let's look at the prices. The entry price was 107,211. The target was 106,048. And the stops were 107,501. Okay, so this was the trade. Yep, this was the trade. So we actually saw that prices was in this crazy uptrend, ranged up here for a while, broke below this market structure, and I considered this to have been a retest. So I probably placed it like this at the time because prices reacted to that. There's a strong rejection here, and you can see after they broke here, gave us that as a retest. So once prices advanced, I considered this a retest. So once let's first look at the higher time frames. Obviously, so on the 4 hours again, the trend had already turned bearish. So the trend was on our side on the 4 hour. Prices broke below this minor structure and was looking to engulf that bullish retest candle. So according to the 4 hour basis, we were still on the right track. Even on the daily, it looks like prices were also on our side because we had that bearish engulfing candlestick on the daily. We had that bearish engulfing candlestick. This was the low, and prices broke below that. So prices were in this kind of an upward range. You can see prices were creating higher highs, higher lows, and then here prices created some kind of a higher high, but on the same market structure, and then pushed low, created that bullish candle, and then rejected low, breaking below that low. So it was a minor uptrend that had been a minor downtrend that had been created right here. So on the 1 hour, let's see how prices played out. Okay, so that was our trade. Prices started pushing lower, pushing back up. Before we get into all that, we need to know when to go break even. So we were risking about 29 pips. Prices, we had to be break even once they reach, I don't know, somewhere here 30. Cool. So prices started ranging. Okay, a good bearish momentum, another rejection. Okay, so prices are kind of losing momentum, gaining momentum, losing momentum. Okay, so till here, prices did create a new low. And once you saw prices somewhere ranging like this, so this is just before the New Year close, obviously, which drives the Canadian dollar. So you will consider like prices will continue being bearish. Mind you, at the time, this trend line wasn't there yet. So I was like, okay, prices still have a high possibility to push lower during the Asian session, because the Japanese yen, that's its session. And during the Asian session, we can see prices gave us that crazy kind of bearish momentum and then pumped higher to weak us out of the trade. Started ranging again. Okay, pumped even higher and just kept on pushing higher till the next market structure. So yeah, we got stopped out of this trade. Now, was this a bad trade? I wouldn't say no, because it really wasn't a bad trade. We took the trade exactly how it was supposed to be taken. But could we have improved on the trade? Perhaps, because it looks like I really, squeezed in the stop loss. I didn't go above this structure here. So that means, for instance, once prices retraced here and then started giving this kind of a bearish push, that means if prices had just come to retest these highs and were looking to push lower, we would have been stopped out of a good trade. So we went too aggressive on the stop loss. I'd say next time we need to actually, give it some room to breathe, put it above the high like that, so that even if prices do retrace somewhere like that, we'll still be able to stay in this beautiful trade. But as far as everything else, this was a beautiful trade. Prices didn't just play out in our favor. So we can see once prices came here, formed some kind of structure, pumped higher, and then did touch the trend line for the third time. So once prices bounced off here, they created that as the second point of this trend line, and prices reacted to it again there. And we can see how prices after that just kept on pumping higher. Now, some may ask, maybe could we have taken a trade, because this will have then given us our warrant first, second, and third touch after just being wicked out. So could we have taken this? No, not there, like there. Could we have used this as some kind of structure and then prices pumping up here, using this as an entry? Let's see. So prices would have been there, right? Okay, so let's see. On the daily, how would have prices been looking? Okay, so this, I think it's after the daily closure, because it's way up there. But prices are looking to be closing bullish, right? So on the 4 hours, okay, again, here prices have just closed. So look at the price, it's 107,658, 107,448. So the prices in the 4 hour have already broken above here. But for me, if you ask me, I wouldn't take this trade as it is right there. And the reason being, here there is a structure which has been respected multiple times in the past. Just on yesterday, I think, no, while we were back testing Euro JPY, we saw there was a trade that we lost because we took it as it was just approaching a market structure, and then prices retraced, stopped us out or something, and then just went ahead in our direction. So I find that like this is very risky and it's not worth taking it. Yes, sometimes it may play out in our favor, like it will right here. Prices will just break on and keep on pushing high. Sometimes that may happen, but it's unnecessary risk. It's a risk that's unnecessary to take because the trend is clearly still bearish, and prices, once they break here, this market structure, it will then be a safe trade to take. Now, this isn't one of those scenarios that we were being too conservative. Like yesterday, we saw an example. On Tuesday, we saw an example. On Monday, we saw an example while backtesting Euro USD. With them, prices have already broken some kind of a structure, a major structure that is, and then indicating prices are still going in our favor. And they have been supported by the daily and the 4-hour structure, right? In this scenario here, we have a resistance before that happens. So we need first to see prices break until somewhere here for us to consider this a safe trade and take it. So I wouldn't pull that trigger, is what I'm trying to say. But yeah, then that's how it played out. So in this scenario, it was a beautiful trade we took, but we just got stopped out because that happens in the market sometimes. You just gotta face it, right? So that was the first loss that we took. The second loss that we took was on the 24th. I think both of the two remaining losses were actually on the 24th. So the first trade that we took, it was on the 24th at London session at 10 a.m. It was a short 10 a.m. (11, 9, 10). Okay, so it was right here. So let's do the bar replay one more time. Let's put in the entry price and the stop loss and the whatever. Entry price was 107,278. Profits 106,060. Stops 107,48. Right. So we took our entry in there with the stops above the most recent low. So obviously here we weren't aggressive in the stop loss as the last trade. We gave it some room to breathe. I think a pip or two, which is cool. So we saw that prices had broken below this structure, and this, we considered it some kind of a retest. So at the time, you can see prices were actually being rejected off this structure. So at the time, this was the sensitive part of the market. This was the market structure that we were watching. So this was a break and a retest. Again, this was a beautiful trade. So first, let's look on the higher time frames. Okay. So on the higher time frames, looks like we didn't have a confirmation on the 4 hours. So that's okay. The trend was clearly bearish, but we didn't have a confirmation on the 4 hours. And the daily was cool too, because this is the day that we're taking the trade. So the past 2 days, we can see the bears actually pushed past low, this most recent low. So the next structure was actually this one right here. So the daily was okay. The 1 hour was okay, but the 4 hours wasn't all that, because what we use the 4 hours for is giving us the candlestick confirmation, and we didn't have that. You can see that we didn't have that. The candle that we're taking the trade will actually close in a doji, but that was after we took the trade. But we didn't have a confirmation. So that was our mistake right there. Prices played on, pumped lower, looks like started to create some kind of, okay, they just wicked us out, and then they started pushing lower again, but we have already been stopped out of this trade. So in this particular scenario, I'd say the mistake again is on me, because I took the trade without looking for confirmations on the 4 hours, which is very risky because it then becomes too aggressive, and the chances of it losing are higher than had we had a confirmation. So that trade's on me. That loss, we didn't deserve to take it. And then the following trade again was on the same day. So this one was taken on 10 at 10 in the morning during the London session. The following trade was taken in New York, somewhere up here. So the entry price was 107,306. Profit 106,044. Stops 107,554. Okay, so I even went aggressive on the lower time frames. Insane. So again here, it's clear the trend is still bearish or everything. We took this move as it was pushing down here, right? But did we have that confirmation again on the 4 hours? Okay, so this time prices had closed the doji. So, excuse me, that doesn't necessarily mean that that's a confirmation, but yeah, but it did indicate a loss of momentum. So we still took the trade aggressively. I wouldn't have considered taking this trade. Like, because for instance, look at this candle here. Prices closed the doji on a market structure. This indicates a lack of momentum, but prices still pushed past that candle and above the structure, if you will. So again, this was an aggressive entry because again, the daily still stands with us. The 1 hour, it's okay, but the 4 hour, we didn't have the candle confirmation. So this was again a reckless loss. So out of the 3 losses, we only deserved 1 loss. 2 of them were reckless moves, and that's on me, right? So right here, we shouldn't have even taken those trades. But oh well, cool. So obviously, we're going to work, and these mistakes aren't going to be repeating themselves past here. So yeah, now those were the trades that we took and we lost during the month or during the past 3 months, which all of them happened in August. So now we're going to just be doing the back test of the pair in whole and see how it actually resonates with our strategy. So we can see first, like since July, prices haven't really been trending, right? So this is also another reason. Like I told you guys, this is the summertime. Prices don't really trend that much. But at the end of the day, we still have to, like, we go through it. So we have to learn, how do we adapt in this low volume period? How do we trade the markets? That's what we need to learn. Because obviously, it's obvious during the good times, we always make a lot of returns on our investments, on the trades. But these months are bound to happen. Like after this comes December and January, right? All the way past to mid-February. That's when the volume starts kicking back in. So these months do happen in the market. We just have to learn, how do we adapt? How do we trade these months specifically, right? So that's what we're going to be doing. Look at this since March here, how prices are just trending. April, May. I just love this when prices are trending. But look at this, it's headache. It's a headache. All right, cool. So let's start off from June. June, where you at? June, right here. Okay, so June, this is how prices were looking. Let's start from a higher time frame so that we can well have the bigger picture. And this is how the bigger time frame looks on CAD-JPY. So just a quick highlight, how would we have analyzed this pair? Okay, so prices bounced off this market structure, pumped way high, creating a higher high. After breaking past this high, that's a new higher high. So I'd consider prices are now in an uptrend and they are looking to push higher until they reach somewhere there. That's my view on this market. All right, so now we have already our buyers. We need to know where are prices, because if prices are bullish, we need to know where are the possible places where you can get some buy entries. We'll go down to the weekly. On the weekly, we draw some kind of structures here too, because it wasn't that clear on the monthly. So we have that as our structure, support, and prices indicate to have broken above that high. So right there, obviously I'll be looking to take a quick buy trade until prices reach somewhere there. And then if they break above that, then we'll be looking for entries to buy until somewhere there. But if it bounces and it starts retracing, I know I'll be looking for a buy somewhere down here. So that's my game plan on CAD-JPY, right? Now, okay, so right now prices are still looking kind of bullish, approaching an even minor structure. I think it will be much clearer on the daily. Excuse me. So on the daily, this is how it looks like. So we have some kind of structure there. And again, prices just broke above this right here. So obviously, my game plan right now will be seeing prices kind of retracing a bit for us to look for that buy. And should prices fail to break here, we'll be looking for some kind of structure formed, which will be then there. And pump, maybe give us another retest there for us to swing until prices reach up there. That will be my game plan. However, if prices pump all the way until up here without giving us this retracement, I'll then be looking for some kind of maybe a retracement, and then we pump all the way until up there. So let's see how prices play out. Okay, some kind of bearish push, bearish momentum, back bullish pause. Okay, so we can see prices here. This, mind you, is the daily. So the daily obviously needs to be watched closely in your trading. What happened yesterday, so that you can know how to deal with the markets today. So here we were anticipating to see prices pump until somewhere here, but that didn't happen. Prices pushed and then lost its bearish momentum and then gained this bullish momentum. So right here, we should have understood like prices have a very low probability of pushing until there, because they've just retested these highs. You see here, prices had a resistance, broke above that. So this should be considered as a retest. Right there. So from here, the following day, we should have been looking for buy trades to swing with them until somewhere there. Okay, so this is the 4 hour. In the 4 hours, where should we have been looking for entries? Okay, so this is the 4 hours. Let me look. Let me see. Where do we get that rectangle? It doesn't show there. Nope, it doesn't. Okay. So I was trying to look for some kind of structure to align, but it doesn't really. Yeah. So prices were pushing higher, reached here, started ranging, created a higher high, and then this low pushed back into this structure this kind of a pull, right? And then got rejected back up, breaking this low or this high, considering this kind of a retest, and then gave that bullish crazy impulse move, right? So for me right here, I draw that as a structure. Mind you, this is the 4 hours, so we already have the daily confirmation. So that means the 4 hours, we just need to see a break above that. Okay, looks like it's retracing, kind of being rejected. Prices have broken above that. Okay. Okay. So for me, I'll be waiting for that retest and then for us to take the trade. Prices are kind of losing momentum. Okay, woof. Crazy bearish drop. Okay, losing momentum. The bears are losing momentum. Okay, so let's pause. So right here, we couldn't take this trade because it created some kind of a morning star, but the bullish candle was still smaller than the bearish candle. So obviously the bears were still in control, and we were proved to be right, and you can see the bearish candle drop. But here we have another solid bullish engulfing candlestick because it has engulfed the previous bearish candle. So right here, I'll consider this as my confirmation candlestick. Go on the lower time frames to look for actual entries. So we can see here on the 1 hour, prices created some kind of a double bottom. So I'll be looking for my entry somewhere here. Losing momentum. Okay, prices. Prices have created that. That's interesting though. That's crazy interesting. So for me right here, would I pull this trigger? A lot of rejections. For me, I'd hesitate. I'm not going to lie. I'd hesitate pulling a trigger here because it's a C3 trade, a badly set up C3 trade at that. I'd consider prices maybe pulling back until somewhere here. Then I'll be more comfortable taking the trade because I'll have two confluences. Right here, for me, that's very risky. See? So had we taken the trade there, we would have been stopped out. Prices wouldn't have even pushed in our direction, but it was a solid break and retest. But it was a very risky, scenario. So right here, prices have retraced. Now, if prices give me some kind of a bullish candle here, I'm going to look for an entry there. Ooh. Prices are pushing lower like nobody's business. Okay, so insane moves, insane moves, insane moves. So that trend line is no longer valid. So is this structure. So prices have pumped all the way until somewhere down here. Found support here. It looks like prices are creating higher and higher supports. Will this one be valid? Too low. So that will be the new structure, the new rejection of sensitive structure. So for me right here, prices, I'd consider them to be ranging that much. I wouldn't want to take a trade until prices broke above that trend line. Because if prices retested just on this structure and pushed higher, I would have understood prices still have a momentum and they have to keep on going. But they retraced all the way down here. Even if they're in a bullish trend, it is clear it doesn't have momentum, retraced all the way back here. I don't want to be in a trade where there's no momentum. So I'm going to wait until prices break above here, then I may consider taking a trade. But before then, I'm just going to stay out and watch it do its thing. See what I mean? Prices pumped until somewhere up here and then pushed back up and then closed back up. I'm not sure if it was a fundamental or just the market, but it was a crazy day. I can promise you that. Now prices have broken above the structure beautifully, so I'll be looking for a retracement for me to enter because the momentum is now clearly very strongly bullish. I don't want to waste that. Okay, some kind of retracement, but it looks like prices are correcting, they're not retracing. So you need to know the difference between prices correcting and retracing. If prices are in a very high like volume market, they won't retrace, they'll just correct. When I say correct, I mean something like okay, let me use this. If prices are in a very high momentum, they won't retrace, they'll do some kind of a correction. You may find prices will just start doing something like this maybe, and then it will just take off and keep on pushing. But if prices are in a healthy trend, are in a healthy market, they'll retrace, they'll pump, they'll retrace, and then they'll continue. But in a high volume market, they're not going to retrace, and obviously the retracements are obviously deeper than these corrections. So the corrections are always just near where prices are. How do you catch corrections? Obviously you just have to draw them, because most of the times they correct by drawing flag patterns. So you just look for the pattern correction or the pattern trends patterns, and then you look for an entry, you take the trade. So let's see how this plays out. Okay, so it looks like prices are retracing now. We have a structure here. Voila. But we're not going to be taking this trade because prices, if you look on the 1 hour, prices had a high, had a low, lower high, lower low, lower high, lower low. The trend is clearly bearish. We're not pulling the trigger. See what happened? Prices failed to break above this structure. So if we considered this as a retest and took the trade, most likely we wouldn't have survived it. We would have perhaps been at break even, let's see, but we wouldn't have survived the whole trade because the trend was still clearly bearish. Risking 12, prices pumped about 20. So yeah, we would have been a break even once prices stopped us out. Okay, prices have broken below here. Will they give us some kind of a retest to swing with it until somewhere here? Oof. No retrace, it just dumps. Insane moves, man, insane moves. Okay, so prices have pumped lower, insanely low, pushing even below this low, and then retesting these previous lows. So what are prices doing right now? Only God knows. So it's clear this trend line is no longer valid. We have new lows. Now, I'll be looking for prices to create some kind of a range in here. The reason I'm expecting that to happen is because it did so on the left hand side, and I expect prices most of the times they repeat what they did on the left hand side. So let's see how prices play out in here. Okay, so it didn't. Prices didn't range in here, they just took off. Okay, so let's pull back. Let's pull back to somewhere from here. That was 2 in the morning, okay? Here's how the daily looks like, because I want to look at it from a daily perspective. How would I have reacted? Yesterday's candle, crazy bearish, and that day's candle, an inside candle, bullish as it is. The 4 hours are still looking bearish. Hang on. So yeah, right. So the 4 hour lost momentum, the bears kicked back in, lost momentum, started kind of ranging, created some kind of a bearish pattern. So this was the next market structure. So it's crazy how prices were acting here. A lot of range, not a clear trend, but you can see how prices were acting, right? But it's clear it was creating some kind of high highs, the higher lows, but the highs were the ones that were not, clear. But once it created that 4 hour candle, it was very clear that the trend is crazy bullish and high possibilities to keep on pushing higher, right? But remember, after it created that, it was also right there. It was also on that resistance structure. So yeah, man, it was an insane time. I remember this time here. I was like, no, I'm not going to be trading this. Because what do you do when prices are on a resistance structure? And then prices, it looks like we're no longer where we are. No way. Jesus. Hold on, guys. Did the charts just fast forward themselves, or did we just backtest until 31st of August? I don't know what's happening here, guys. If somebody saw anything down, now's the time to speak. I don't know what's going on. Because I know did we just backtest to 31st August? Or did the charts just, I don't know, man. There was a lot of range. Like since July, look at how the markets have been acting. Since July 18th, so that's mid-July. Look at how the prices have been acting. Let's just put a pause to it. Like, look at this. No clear trends. Like when was this? The whole of August. This is it. It's a whole range, no trend. Right here, prices were trending. It was a downtrend, but you can see clearly the lack of volume. Look at all of these weeks. Like, it was insane. The weeks on June, this was still July actually. At least here, prices gave us some kind of a decent trade. That was in July 21st or something. There was some kind of a decent trade. This was messed up. You can see the amount of weeks. July hasn't been healthy. It hasn't been healthy. Out here in July, the beginning of July, there was a healthy trend. This was a healthy trend. But then from there, once it reached here, disaster. I mean, but it's those times of the year, right? It's those times of the years. We can't blame the markets. No enough volume, no enough liquidity. So yeah. But yeah, I don't know, man. That's Cadjpy. But I'm not really sure what really happened if we really back tested to 31st August. This was the 5th July. Prices dumped. Insane. Okay, guys, should we backtest gold? Because it looks like we've just been here 30 minutes. I'm not sure if we finished backtesting this one. I'm not sure what happened with Cadjpy. Like, how could we have done that so fast? Like, what's going on? Okay, so that means on Saturday we won't be having the session because we are now backtesting gold. Let's do this thing. Okay, so it looks like, I don't know what I was explaining here, but it looks like prices did. I think this was a retracement. I was anticipating it to happen, so it looks like it did. Fortunately, we don't take trades on gold, so I'm not sure even if I even called it. All right, so daily. Yeah, it's crazy when you say you don't like the market structure on Cadjpy. I mean, Cadjpy is a great trade. It's a great pair. It trends a lot. It's just that time of the month, or excuse me, time of the year. Look at that. Look at this beauty right here. Look at gold, guys. It's a clear head and shoulders pattern. Man, oh man, I cannot wait to get back on the market next month because I think it will dump like crazy. It has a very high possibility of dumping because even the trend shows it's a clear downtrend. We have a high, low, lower high, lower low. Give us a retest and see ya, baby. Oh man, it will be insane. So it will most probably dump all the way until somewhere here. Jesus. It's sad I don't trade gold because I would have gone one lot in it and just left it swinging. Look at that, baby. Sheesh. But it's obvious you'll be having a couple of distractions or a couple of structures along the way. You have that as the first, and then that as your second, and then after that, down here is just going to be messy the rest of the road. But these first two moves will be very sweeter than honey. GBP JPY, I dropped it because it's not one of my best performing pairs. As I said yesterday, I only picked the 5 best performing pairs, which turned out to be USD JPY, Euro USD, GBP USD, Euro JPY, and CAD JPY. You only trade the US dollar pairs, Vera? That's nice, man. That's nice. All right, so the US has more volume, obviously, so it makes sense. So we're going to be back testing from June. Let's bar replay. June, where you at? That's 31st, 29th. June, that's July. June, somewhere there. Right, so let's remove the drawings. So far, that was when June was happening. Once you asked me what's going on here, I would have told you without blinking, this is a bullish trend. Because prices had a low, had a high, lower high, higher high, excuse me, higher low, higher high. And then prices broke below that. So okay, we had some kind of a low here. I didn't see it by zooming out. So we had some kind of a low here, and prices gave us that retest, and then now it's looking kind of bullish, but it's after it bounced off this structure here. So the trend, the bigger trend, is obviously strongly bullish, and then we have this minor inner trend that's looking kind of bearish. So obviously, should prices break above here, we'll be looking for prices to push until it touches that. Should prices break below, I'll be anticipating them to push until somewhere here. Let's go. That's the daily. Prices are looking very bearish on the 4-hour time frame. So let's go back to the daily pump. Okay, so looks like prices have pushed back to this structure. Oof. Crazy bearish momentum, and giving us a bias indicating that prices have respected this low and it now looks to be pushing lower. So from that perspective, we should have been looking for lows. By the way, gold doesn't have a track record because I don't call trades on gold. So I'll be anticipating for that to happen. Now going to the 4 hours, we need to look for some kind of a trend so that we can look for entries. All right, so if prices have broke below here, give us some kind of a retest here, we're good. Prices are pumping lower. Okay, prices pushed past our structure, but it looks like it's losing momentum, like it doesn't have a bullish momentum. The bears are now kicking in. The bears have now kicked in, right? The bears have now kicked in. Looks like it was a bounce off, because this will only correlate to a Fibonacci, I believe. So 0.5 doesn't align with it. I think it will actually align with the 0.618. Voila. It aligns with the bounce off the 0.618 Fibonacci key level. So obviously, we're looking for Fibonacci extension tool. Too close. So let's just use the main structure that we're looking for. So obviously we can see here on the daily, prices retraced back up and then created that crazy bearish push. That was the confirmation. And on the 4 hours, prices bounced off the 618 Fibonacci key level, that being the confirmation. So now we just need to look for entries on the 1 hour or lower. So that's as far as the 4 hours been. So for us to look for, or for us to take an entry, I'd say prices need to break there and give us a retest. We already have our confirmations on the daily and the 4 hours. We just need an entry. Jesus, look at how prices are pushing higher. So like you see the beauty of waiting for an entry at the exact point where you want it after the trend has changed. Had we said we take the trade just because we've seen the volume on the 4 hours, we would have been stopped out of this trade without even getting to break even. A lot of range. Prices don't really have that much momentum, eh? When was this? June. Still in June. Okay, so now prices have broken below this low. Let us pause. Okay. Prices have broken below here, broken below this low on the 4 hours. So we need to be anticipating moves until somewhere here. Hold on. Okay, so prices here looks as if they're changing the minor trend inside. So let's look at it from a lower time frame to understand what I'm saying. So look at this minor trend. We had a low, we had a high, lower high, higher low, higher high, and now prices are looking to create again another higher low. So prices need to break below that, or out of that channel, if you will. A lot of range. Oh, Jesus. What's going on? So it looks like we had a fundamental here, man. This isn't normal volume. We definitely had some fundamentals here. It was on Tuesday. I'm not sure what fundamentals hit on Tuesday, and it was right at the New York Open. So yeah, I think it's maybe the PPI or something, CPI or PPI, either of them. Yeah. So fundamentals hit, prices broke both sides of the equation, both for the bullish direction and the bearish direction. Now let's see where prices will continue, because now I think volume is being pumped into the market. Okay, one thing to note, after the fundamental has hit and you see a lot of wicks, the side in which the candle will indicate it's pumping lower to, there is volume being pumped in that direction. So best get an entry from there. Okay, so for me, I don't really trade gold, as I said, obviously, but I'll consider looking for an entry using this as my confirmation candlestick. I wouldn't consider using this one because it didn't fully engulf this bullish candle. This one did. But as you can see, it's only the 15 minutes, so it won't be a lot of pips. Obviously, it's a lot of pips. I thought it wouldn't, but it is. If you cover until the week, it's over 90 pips. Insane. 90 pips. Stops somewhere being there. Targets being somewhere there. It doesn't give us a 1:3. It doesn't give us a 1:3. It gives us a 1:0.5, 1.5. So it's not worth it. It isn't worth it. So the entry would have been there. Targets would have been down here, but it's not worth it because the risk to reward isn't. Yeah, it isn't what it is. Could we have forced maybe to look for a thinner or a smaller? So let's say here and there. No, that's too risky. I wouldn't use that. So it's a great entry, but the risk to reward just doesn't make sense. So I wouldn't have taken this trade. I only take trades with 1:3 or more. But obviously our bias was right. Prices pumped. I believe we would have been at 1 hour by then, and we would have been at break even. So yeah. For hours, prices then went ahead to pump all the way until down here. Now, for us to get a legit entry, we should wait and see if prices will give us some kind of a retest. Then we'll look for an entry. If not, we'll have to wait until prices break below here. Then look for an entry. So prices did push all the way until down there. Probably targets were hit. Prices have broken below our structure. Now we need to look for an entry. Retest on the 1 hour at the structure. That's beautiful. We already have confirmations from the daily. 4 hours just gave us that change of trend. Right here would have been our entry. Stops would have been there. $70. Right there. Where would they have? Would we have had our English? Why are you escaping me now? Where would we have placed our targets? We would have been aiming for somewhere down here. It looks like we already know the results of the trade. We will be stopped out, as you can see here. So, all right. Would it have given us a reasonable risk to reward? Yes, it would. About 1.97. So almost 1:4. Let's see how it plays out. Prices are pumping. Oof, we would have been at break even. We would have tapped break even right there. We would have tapped break even. So we would have been at break even and stopped at break even on this trade. As it went all the way in our direction, and then at about 1 hour in our direction, and then reversed all the way back to break even. So we would have been at break even and stopped at break even. Jesus, what's that? It's insane how the market's been playing out, man. So gold doesn't really, I'm gonna be honest with you guys, like, I remember when I was back testing all the pairs, gold wasn't really it. Like with pure price action, the way we trade, gold, okay, it's a profitable pair, but its win rate was very low. break and a retest. Stops somewhere there, aiming for somewhere 3.4. Okay, so let's also put the 340 something, 350. Cool. Let's see. Stopped out. Okay, so we would have been stopped out of this trade, and then prices started dancing again like that before they actually dropped it crazy. Okay, so that just happened. New market structure, prices retesting it. Okay, we look like we're getting a continuation and a retest, so we might be looking for possible entries there for prices to continue swinging until somewhere down there. Do we have a 4-hour confirmation? Okay, prices retested that. Came back here, strong rejection though. Daily. Prices pumped lower. Created a new low. Right? So like the candles right here, they're having a lot of wicks, and a lot of wicks indicate there's no volume in the market. That's why I'm very hesitant to even call in a trade. Once you see prices are having a lot of wicks, a lot of rejections, that just indicates a lack of momentum in the market. I don't like that. I want to see health. I want to see this. What just happened? Like prices created that crazy bearish candle, pumped all the way down here, and then came back here, closed here, rushed back down here, and then, yeah, no, thank you. Okay. That's a lot of crazy nature. You shouldn't hate a pair, JJ. You shouldn't hate a pair. Amen. Gold is crazy, man. Okay. See what's going on. On the higher time frames, looks like prices closed with a doji. But then on the 4 hours, this looked as the most sensitive area low right here. Prices pumped back up here. Yeah, no. It's clear prices are going to be bearish, but taking a trade there is just executing by being very aggressive. Now, in some scenarios, I do say we have to be aggressive, like in the examples we had yesterday and the day before. But in a scenario like this, that's just being too aggressive. And we were being aggressive on the lower time frames because we already had confirmations on the higher time frames. But here, we're on the 4-hour looking for a confirmation. We can't be aggressive with a confirmation. We can only be aggressive with an entry, not a confirmation. A confirmation has to be solid. Prices hit our target. We didn't get a really good confirmation to call an entry on. So yeah, that's just gold. Can't blame it. Okay, so prices started ranging again. This is the 4-hour. Looks like prices are turning into bullish because they created this new high. Let me pause. Retest. See that? So it's kind of a break and a retest. Prices have broken below again. Okay, let's see how it closes. Sheesh, look at that. Jesus. Yeah, that's gold. I'm literally just sitting here looking at, there's no way in hell. Like, for instance, we use confirmations on the 1 hour. We can't take a trade after that crazy drop. That's a lot of pips we're going to be risking. A lot of weeks. Like, pump and dump. JJ said it best. Like, it's crazy. Gold isn't really a price action pair. That's for certain. Like, it wins sometimes, but its win rate is very low, as I said at the beginning. So again, I'm not really going to be focusing on trading gold. I'll always just keep on breaking it down, guys, for you on YouTube, for those that want to see my views on it. But even backtesting it's pointless, because we backtest for the sake, in order for us to improve, for us to know where we went wrong, know what we can do to make our trading better. Backtesting a pair that we don't trade and we won't really trade, I feel like it's just a waste of time. So yeah, guys, I'm not really going to be doing this anymore. It's just, yeah, true. Martingale traders actually benefit more on gold, because once you get like a move like this and then you see it keep on pushing, you just keep on adding trades. So it's insane how they always trade that. So yeah, guys, that is our beautiful gold. It always welcomes new traders in the market because it gives them the promise that they so crave, the desire to be rich fast. You know, it's crazy. It's crazy. But once it disciplines you, you start looking at, where is Euro JPY now? Gold is crazy. Gold is crazy. Gold is insane. NAS 100. I don't really trade these volatile pairs. I'm good with where I'm at. I'm good. Yes, sometimes some months may be slow. We may have a slow month like August. We only had 1% return. Obviously, we've backtested. We've seen we made some mistakes along the way. Had we not made the mistakes, we would have had a higher return. But at the end of the day, even with the mistakes, we still ended up being profitable. So I can't imagine how next month will be. Sharp in the market. Guys, it's going to be insane. So if anybody has a question, guys, You started looking for slower pairs after gold burnt your account. Crazy, JJ. Gold disciplines people. Like there's some traders, you'll ask them what pairs you trade, they sell go only gold. Okay, that's okay. I'm not saying gold, you shouldn't trade it. If you have a trading system that supports gold, that is profitable with gold, trade it, kill the hell out of it. I'm happy for you. I'm proud of you. But if you're using price action, it's not really going to, you will be profitable because obviously it was a profitable pair, but most of the times you'll be stopped out. And all the pressure of this crazy volume, not for me. I like to take it slow and steady. I don't like the quick wins, right? So guys, yeah, that's today's session. Tomorrow we'll be closing the back testing session with GBP USD. Will it be a winning pair? Will it be a losing pair? Who knows? We'll find out tomorrow. So till next time, guys, appreciate your time. Thank you for showing up. I'll see you guys tomorrow, same time. Peace.